We've got Mr. N.S. Venkatesh, who's Head of Treasury at IDBI Bank, joining us on the show. Mr. Venkatesh, clearly everyone's focused on the May inflation number out tomorrow. What's IDBI Bank expecting?
We expect it to be around 7.5 levels, which will be a little bit elevated than the last month. But we believe that the core inflation should be below the 5% mark. So if that is there, then at least it will help the Reserve Bank to look at the rate cut in a serious manner.
Sure. So Mr. Venkatesh, the core inflation number, by your estimate, do you believe that if it comes in below 5%, the RBI will do something, and that if it continues to hold above 5%, the RBI may not push ahead with the rate cut on Monday?
The thought process is that basically they track the core inflation. So if it is below 5%, then there is every chance that the Reserve Bank will go ahead and cut the repo rate by around 25 basis points. If it goes above, then it is a 50-50 chance.
Sure. Mr. Venkatesh, given that slumping growth continues to be a concern, monetary measures are expected. Do you think that a 25 basis points rate cut has already been factored in, and perhaps what we anticipate is a higher rate cut from the RBI?
The markets, as you have rightly put forward, the markets have discounted a 25 basis point rate cut. That is why you are seeing the bond yields actually dropping substantially. From the opening of 8.08, it has come to around 8.03, 02 levels, the new 10-year benchmark. So I think the market has discounted a 25 basis point rate cut. But I believe that RBI will continue with the accommodative stance to ensure that the growth, they support the growth. So to that much extent, I think a 25 basis point cut is what I believe they may look at it at the current juncture, with the inflation still, the headline inflation still above 7%, and the core inflation may be at around 5%.
Right, but Mr. Venkatesh, the ET Now poll seems to indicate that the core inflation number will come in at 5.4%, which would be higher than the previous months. Now, should we just make the argument that the core inflation number will come in, let's say, at 4.5%, which I don't think anyone believes it will. But if it does come in at 4.5%, does the market even view the possibility of a 50 basis point cut on Monday?
At this juncture, if that happens, definitely there could be a bigger cut that can come on the way. But my personal view is that maybe they may come with a smaller rate cut of 25 basis point, because they had given a 50 basis point cut in April in the monetary policy. So they'll continue with that accommodative stance and give that 25 basis point cut.
And would you agree, Mr. Venkatesh, that at the current juncture for the RBI, the bigger headache is not so much the liquidity within the system, but that of the rupee?
The liquidity within the system, I believe, is still within the comfort zone, because at around 68,000 crore, the left borrowing, I think it is the plus or minus 1% levels which RBI has been indicating. I think it is within that level. So to that much extent, liquidity is not a major worry at this particular point of time. I do agree about the rupee. Rupee is always a worry that way, because it's currently going at around 55, 80, 85 levels. So giving into a bigger rate cut will also have a little bit of an impact on the rupee.
Mr. Venkatesh, going with the assumption that there is a 50 basis points cut, do you see a big reaction from the bond yields?
I think 25 basis point has already been factored in. So if a 50 basis point comes, maybe we might see the 10-year bond yield dipping below 8% marginally, maybe around 790, 795 levels.
But do you expect it will hold below 8%, or do you believe even if we do have a 50 basis point cut, it will still climb back to above 8% in due course?
No, then I think it should hold at that level, because then that itself indicates that if RBI is continuing with another 50 basis point cut with the earlier 50 basis point cut, then it really indicates that they are supportive of the entire growth story. They have to, RBI has to cut the rates further down the line to ensure that the growth picks up. So it is positive for the bond market to that much extent.